Hey guys, we're going to be getting started here in about 2 minutes, 3 minutes. Just want to see if we got a good sound check out there. Let me see here. Here we go. All right. Hey, thank you. Perfect. Okay. I am in Florida and it is cold. So if you all know me, I've been in Puerto Rico for about 4 years. Uh, bought a home here in Lake Alfred, close to Orlando, and and anyway, really miss the climate over there. So, all right, guys, where are you guys from? You guys from the cold too? Uh, New Jersey. Okay, yeah, that's definitely cold. Anyone else? Hey, Texas. I lived in Texas for a little while. Anyone else? Chicago. That is cold. Corona, California. Hey, I was in California 1 year. It was fun. Ann Arbor. Ooh, that's close where I was born. I was born in East Lansing, Michigan. Believe it or not. Deanna, Wyoming. I always wanted to go to Wyoming. Here it's very, very western. Parkland, New Hampshire. Nice. So we got a lot of people all around. Anybody from outside the US? There's always somebody out there. Of course, some people think Puerto Rico's a different country, but it's not. it's a state with a lot of problems with electricity. All right. Okay, guys. All right, so let's get started here. I've done this webinar quite a bit of times, and full disclosure, I've patched in some some different videos, and not videos, but different shots with the webinars, and so. Full disclosure, again, there's some older material, but just to let you know, SPX is basically, it hasn't changed for like 20 years. So so anyway, we're gonna get moving here, and so let's get started. All right. Okay, so let's see here. Make sure I get my eyes. All right. Pull this out a little bit. Move this down 1 second here. Yeah, so I can see better. Okay. Today we're going to be looking at the monthly trade. So this is the SPX monthly trade, where you basically it's it's a trade that expires every 3 weeks. Okay, so it expires basically Friday, which is settles, and you can't trade that after Thursday, after the 3rd week. Okay, so that's basically the main trade that I use, and I use it because it's very, very liquid. Okay, and SPX now has really gotten a lot of liquid. A lot of people are trading this now. Okay, so I'm going to show you how you can make consistent returns daily based on margin capital at risk and by SPX monthly high probability trades. Okay. All right. So what are you going to learn today? Number one, you know when to enter a monthly expiration trade. Timing is important. Number two, learn when it's time to exit and take profit. Number three, determine when the best to apply a vertical iron condor strategy. how to correctly adjust threatened monthly expiration trades. Okay, that's really important. How to correctly adjust threatened, okay, I already said that, right? Threatened trade, okay. And how to earn multiple premiums with one in 1 month. Okay, we're going to be going through all of that. Right. All right. So for now, stay with me till the end. I'm going to have a special bonus with you for you guys, and hope you find it of value. All right. Okay. So I'm going to ask you why you're here. Okay. So there are going to be 3 answers, okay? One is you're interested in learning new strategies that will take your trading performance to the next level so that you can finally leave that career behind. Number 2 is you've seen, heard about, read about making money in trading, but you know you can do it too, but you're not seeing the account grow fast enough based on your goals. Okay. And number 3 is you've tried different trading strategies that you thought, okay, this is it, only to discover that you're just not getting to the place where you're getting consistent results. All right. So show of hands here. Number 1, Richard. Okay. Bob, number 1. Excellent. Anyone else? Number 1. Let's see. 1, 1, 1. Okay. Interested in learning new strategies. Great. Perfect. Okay, 3, finding the right strategy. Perfect. Number 2, Amanda, is desire to account grow. Yep. Okay, great. Okay, so we're all over the place. All right, perfect. I think we're in the right place. Okay. All right, so with that, let's see here. I am a normal guy. All right. This is my family on the left-hand side, all grown up. And a long time ago, I had my MBA many years ago, and those are my parents. Okay. All right. So that's just me, and just a regular guy. All right. So now we're going to get into the crux of the webinar. Okay, so number 1 is imagine what you'll feel like if most of your trades were winners month after month, and it would be confirmed by watching the size of your account grow at the same time. Awesome feeling, right, when you do that. And and doing that is really, really important. So you want to have a right mindset in trading. Okay, becoming the trader that no longer takes large losses but consistently trades according to a proven trade plan that is profitable over time and allowing you to grow your account month over month. And that's what we all want as traders, right? I mean, that's really the main thing. All right, so I'm going to talk a little bit about SPX because some people may not know what it is. Okay, it's really widely recognized, and many people trade it. And you can't trade SPX directly, okay, but you can trade it with options, and that's the way that we do that. Okay, so it's really important to understand how you can trade these, and we trade these with spreads. Okay, and we're going to talk a little bit more about the technical aspect of those trades. I'm sorry, of those trades, right? And then these financial instruments that are used, options, futures, they're all intertwined together. Okay, and you can trade these many different ways, with futures, with direct options, different types of options that you can do. And the focus of this webinar is going to be verticals. Okay, they're called the verticals. All right. All right, so let's get going. All right, so what's important for SPX? Well, time decay. That's number 1. Okay, so credit spreads have the benefit of decaying over time. Okay, excuse me. Let me take some water. And that's really, really important to understand. Okay. High probability. You have a high probability of success with trading credit spreads. And the reason is because you don't have to be exactly right trading these, all right? As long as you're in a range, and today I'm trading 0 DTE, okay? The market went down today. But if you're in that range, you're golden. You're fine. You're gonna make money. Okay. It's when it goes out of that range that you can get into trouble, and there's different ways to manage those trades, and we'll talk a lot about that as well. All right. Okay. Capital efficiency is really, really important because it works very, very well. All right. Okay. So let's talk about what SPX credit spread is, all right, and how it works. First, you want to select the options contract, a short contract and a long contract. So you're selling the option and then you're buying the option at the same time. Okay, these options these options have the same expiration but different strike prices. Okay, the short option is sold at a higher strike price, while the long option is purchased at a lower strike price. This creates a range so that it creates this spread, okay, between it. By selling the short option, you receive a premium up front, which is your initial credit. This credit represents the maximum potential for profit of this trade, right? So, so once you put on this trade, that's your max gain on the trade, okay? And then what happens is it decays, and then you get out of that trade either by letting it expire or by closing it out at a lower at a lower time, right? And the long option serves as a form of insurance or protection, okay? So it limits your potential losses in case a trade moves against you, right? So that's why that spread in that range has some protection in it. But if you're pushing through that range on the upside or the downside, you can get substantial losses on that. All right, and I'm sure most of you have probably gotten that. So, but there's a way to get around that and manage it, and it's basically rolling a trade, and we'll talk about that. When you roll a trade, you're actually taking a loss, right? So that you can redo that trade, and then be able to get it not at a max loss, but a little bit less than what you desired, but that's trading, right? So you have to manage those positions as well. Okay. All right. So let's go through credit spreads. Okay. So this is the format that let me see. I don't have that. Put that on here. Okay. Yeah. Here you go. So this is the format that Thinkorswim uses. There's different different ways to manage it, but let's talk about what this particular language is here, right? As it goes, because this is really important. Okay. All right. So the first thing is that you're going to sell, because when you're doing a vertical, you're selling the option before you buy it. Okay. Then the quantity here is 1. The trade type is a vertical, as we talked about. The underlying asset is SPX, so it could be SPY, it could be many other things, but this is what we trade is SPX. The multiplier is 100. A lot of people say, oh, 100 is based on the the number of shares or number of different types of Amazon, all the different share, all the different I don't know what got into me here. Okay, so the different types of anyway, let's go on. Okay, so the multiplier is actually 100. So you're multiplying the position, so 43.50, 43.60, and it's $1, and it's actually meant, you multiply it by 100, and that's $100. Okay, and that's what you're receiving. Okay, and then expiration date is here, April 23, and this is an AM position. So these are European exercise options. Okay, as I mentioned to you before, it's the third week that they expire. Okay, so here's the short strike, so 53.50, and this is the long strike, 53.60. Okay, the option type is a call in this example. So there's two types, call and put, and then the limit order here is $1. Okay, so again, you receive $100 and it goes right into your account. Okay. All right. So now you're selling a put here, right? So basically, it's kind of the same thing. Okay. But the only thing that you're doing is you're selling the put here. Okay. So you can see here the range. Okay, so this is the range. So you go from 43.50, 43.60 to 37.80, 37.70. So as long as you put on this position, you're gonna get $2.15, right, for this particular trade. Okay, so the margin requirement is $1,000 minus the 100 minus 15, so you'll end up getting your max loss is $785. Okay, so again, you're putting on iron condor. You're selling it at $2.15, and this is your max loss. Okay, so again, it can be very expensive if you get out of that range. All right, so let's talk about rate of decay. Okay, so from 68 days to 33 days, and this is based on a call option. Okay, 68 days to 33 days, the rate of decay is 34%. From 33 days to 5 days, the rate of decay is 57%, and from 5 days to expiration, the rate of decay is 100%. Okay, I think I got this. Okay, yeah, we talked about this already. All right, so let's talk about entry exit guidelines. And by the way, I'm going to be taking your questions at the end. Okay, so hang in there. All right, and we'll get through this. All right. Okay, so so let's talk about entry exit guidelines. Okay, so it's really important to initiate positions basically between 30 to 60 days before the expiration date. Okay, so I typically use it, around 30 to 45 days, and it works relatively well. Okay. To start, I like to put on a bull spread first, because most of the time the market is moving up, and so I use a delta, okay, ranging from 10 to 12, and that delta means is that the probability, and people use this, it's really not right, but most people use it as 10 to 12, so you have 10 to 12% that you're going to profit from that trade. Okay, 10 to 12% lose. However, it's somewhat around there. Okay, all right. So you want to put on the put spread first, let the market move up a little bit, 1 to 2%, and then put on the call spread, because it's shorter distance from the call side than from the the put side, okay? And the reason is because when the market moves down, and typically it moves down quickly, and that's why these positions rotate like that, okay? That's kind of how it works. So it's really based on implied volatility. All right. So take profit. I like to take profit at 10 cents or $10 for each spread. Okay, and you could take profit between 50 to 80% of the credit received. Okay, a lot of people do that, and it's more of a conservative way to do that. Okay, or you can take the position at expiration, but you don't want to allow a profitable trade turn into an unprofitable trade. All right, so let's talk about adjustments here, and we'll talk a little bit more on that specifically. Okay, so you want to initiate a roll within basically 1.5 to 2%, 2.5% when you get threatened. So in other words, if let's say the market is moving and it's moving higher and higher and higher, you want to before that position gets breached, you want to roll that trade, and you have time to do that. And then when I'm going to show you here in a few minutes here what happens, then the other side of the trade becomes very small, and then you're able to roll that trade. And I'll give you an example of rolling that trade and how that works. Okay, all right, so let's see here, where am I? Okay, exit for stop loss. Stop losses are seldom, I rarely use stop losses, and typically in a bear spread, where you have a couple of adjustments already, you want to just want to close that trade. It's I very seldom do that, just because I have a way of rolling these trades to come out not so badly, if I could say that. All right, so this is a photo here of a long time ago. Okay, but again, things work exactly the same way. All right. Okay, so in this case here, we're looking at, instead of a 10 wide position, we're looking at a 5 wide position. So you can see here that 24.15, 24.10, and you have a delta of 30 or delta of 10. Okay, and you see this on the other side as well. Okay, a delta of 10, and so so the distance, again, as I mentioned before, your shorter distance is for the call side, and the longer distance here is for the put side, and that's very, very typical most of the time. Okay, all right. So now what happens? Now when the market, let's say, moves down, okay, in this case, okay, you get a move down, and now you're in a position where you need to manage this trade. All right, so here the premium went down to 5 cents. In this case here, it went down to 90 cents. All right, and this was an actual trade that I did many years ago. But again, it works the same way. All right, so let's see what happens. Here's the adjustment. Okay, so step one, you're going to close this trade. Okay, this position here. Let me see here what I had. Right. And so here you bought the 24.15, 24.10 put, and you sold the 18 January 23.40, 23.35. So that gave you a 90 cent a 90 cent premium. Okay, so there, uh, uh, between the two, right, you have a debit of 0. Okay, so you haven't lost any money at this time. You roll the trade. Okay, and you're using the volatility to go from one expiration to the next month expiration, and it gives you that that way to be able to manage this trade. Okay, all right. So and this is what the format looks like. Okay, you're closing one trade and you're opening another trade, and it costs $0. So step 3, now you're going to apply a call spread. Okay, and that gives you an additional 50-cent credit on this trade when you roll it. So basically, you get a credit of 45 cents, and basically you gain 45 cents or $45 minus commissions. Okay, so the premium collected here at expiration is $1.15, and so that's, once this position expires, right, into January, that's what you end up with. Okay. All right. So let's. So that's basically how you adjust a trade. Okay. All right. So now I'm going to give you another real trades that I did several years ago, and I do these every month. Okay. So I trade these every single month, and so what I'm going to show you here is how I position these trades, after so many days. All right, so or actually several months. Okay, and these are actual trades that I placed. All right, so I put a put position, 85 cents. In this 34.25, 34.15, and these are 10 wide now. Okay. And then I placed a I actually closed that trade at 55 cents. All right, so not rolling a trade here, but I took the advantage of the market moving up, right, and I closed that trade and received $150, and these are five contracts. Okay. Now I placed a new trade, a call spread in February, and then I placed a put spread lower here. You can see it lower here at 70 cents. Then the market went up. And then I closed that trade for 10 cents, and then put on a new call spread for 65 cents. And then I put on a put spread for 65 cents. Okay, and you can see the ranges here already in this scenario. February. I closed the call spread for 10 cents, and you can see how the profit is actually moving. Okay, and then here let me see here. I closed the position at 35 cents. Okay, and then I put on a call spread at 55 cents. And then I closed that position at 15 cents. All right, so we have in this scenario here up to $1,025, okay? So from, let's see, from January to February or March, right? We had a nice gain of $1,000. All right, let's go again. Start at 125. Okay, now in March, put on a call spread for 45 cents and a put spread for 40 cents. I'm sorry, I actually rolled this trade. Okay, so now we have a roll here. Okay, that was back there. Okay, so we had to roll this trade, and I received 40 cents on that position. So we went from, let me see here. No, actually, no. This was no, it was a put that I rolled. Okay. All right. So let's get going. Okay. All right, and then we we closed the 48.80, 40.90 call spread for 10 cents. And then we put on a put spread for 75 cents. And now we went from 5 contracts to 6 contracts because things are working well. And here I actually did a condor. What a condor is, actually I did that in the other one as well. Yeah, this is a condor. I actually moved the position up, okay? Or did I push it down? Let me see, 36.70. Yeah, actually I pushed it down and received additional credit. And then on April 7th, I put on a put spread and closed the other put spread for 10 cents. Here we have a rolling profit of 1,700. Okay, let's go to the next segment here. Okay, now we have a 43.90 4,400 call spread at 45 cents. And then a put spread for 55 cents. And then we put on a, let's see here. No, we bought it. Bought it and closed it very quickly just to gain a little bit of profit here. And then another condor here, moved it from 39.25 to 38.25 and received a 20-cent premium and closed out the call spread here for 5 cents. And then closed out the put spread for 5 cents. And that gives us 21.50. All right, I think this is the last segment. Okay. All right, so May here, we went from put spread 65 cents. And then the call side was 45 cents. And here we put on a put spread for 30 cents and a call spread for 60 cents. Actually, this was a close here. This position here was a close. Sorry about that. And then we put on a call spread for 60 cents. And then we put on a put spread for 65 cents. And that's the end, basically from January to May. Okay. So let me see these messages. Okay. All right. So hopefully you understood the process here, what we did. And again, I do this constantly. Okay. Every day that I'm trading. Okay. All right. So the question is, would you like to follow our trades while you're learning based on our strategies that we have? And we have, very more. We have more strategies other than the monthly. Okay. So we do 0 DTE, 7 DTE, monthlies, options on futures, futures, all kinds of different trades that allow us to make money. Okay. So remember when we talked about interested in learning new strategies, desire to see your account grow, find the right strategy. When I started with SPX, it was a long time ago. Okay, like 15 years ago, and it at the beginning it was pretty tough. Okay, to get through that. Right, but I created trade plans around it so that people can follow it and and then learn from it, basically. Okay, and that's really the way to go. So the question is, do you want to break those barriers, right, that are not allowing you to allow your account grow? Okay. Will you keep doing what you're doing and hope that things are going to stick, or you're going to finally take the steps that you can place that you want to, and that it actually works. Okay. So, and it's not a simple thing. All right. It takes work. Okay. So you need a no quit attitude, a commitment to do so, have discipline, and having an edge. Okay. And the edges, are several. Okay. That we have. So we have a trade alert service, and it allows us to trade these trades consistently. Okay. And so we teach you how to, you get in, teach you how to manage these trades, right? We put them on, and then you get the rhythm, right? You'll get the rhythm of how things work. After a month or two, you're understanding how things work, and adopting the way that we manage these trades as well. Okay. All right. So we have a Telegram service, and some of it is automated already. That these trades come in, and then we manage them. And so it's very it's a great way to trade, and there's no mistakes in it because we automated the process, and we're actually doing more of that, right? So we have chat channels, and we have channels for the specific trade alerts, and we can talk in the chat, not in the channels, but in the chat groups, but not in the channels, right? We keep that to make sure that any of these trades come in, you know exactly what to do, and it's and it works. Okay, so we have a great number of trade success stories. All right, I don't want to give it to you all, but there's a lot in there. Okay, so the question is, or actually, in our trade alert service, we have a guarantee. Okay, so if you come in and you subscribe for 1 month and lose money on, when you're following these trades, I'll refund the subscription amount by $125. Okay, and 1.25. So you actually make money, not make money, but based on your subscription. However, we've never had to give money back. Okay, just because things work. I mean, they really do. Okay, so here is our subscriptions. Okay, we have 4 subscriptions. One is free, and it's a free chat channel. We provide some trades in there, and so that you can get some of the rhythm in there. Okay. And let me get the, let's see here. Okay, let's get the offer. Yep. Okay. And publish. Every time I get into this webinar, they change the thing. Okay, so you should be able to see the offer, okay, in here. And so we have 4 tiers, well, 5 tiers. One is free, and we have $59, $99, $129, and $199. Okay, and these are all these different tiers based on the kind of trading that you guys do. Okay, and so we are actually closed right now for new subscribers, and for many times we're open. Okay, so it's just that this time we're going to be opening in about a month to new subscribers, and the reason we do that is because we want to make sure that everybody is getting the same information. Okay, so we don't allow people to trickle in and then getting the same repetitive answers or questions that they get. So we, a long time ago, we decided to open it every 3 months, and that way everybody is new. Most of the people that come in are new, and they work together and learn together. And between 1 to 2 weeks, you're in that rhythm, and things work out really well. You've answered all the questions. We've answered all the questions. You've done what you need to do, and then we do a lot more trading and managing trades. And you can ask questions during that time. For me, and we have like 3 or 4 other traders in here as well that they're very, very good, and they're basically, they live, this is what they do. They trade for a living. Okay, and they're great people. So so with that, if you want to learn step-by-step process to gain income in a market that goes up and down, okay, you want to finally break those series of losses, and you want to earn consistent income that sets you apart from other traders, this is it. Okay, you have the people around you that helps you. You're actually trading in an environment that's real. Okay, and we do this so that you learn. And a lot of people actually go into the service and that they trade. They stay 3 months and then they learn. And it's really inexpensive to get that kind of training. Okay, so hopefully you'll try it out. Okay, and again, you'll have access. At this time, if you join the wait list, you'll be able to subscribe by joining. Okay, and you'll get $20 off as long as you join the wait list, and we'll bring you in every 3 months. And we're gonna be opening in about a month. Okay, but this is how we work. All right. And we have a professional traders chat group and subscribers chat group as well. So there's guys that are in here that trade their own thing, and they share what they do. Okay, so besides the monthly trade or 0 DTE trades, these guys have different ways of trading, and they share it, and we love that. Okay, and they're in there every single day. So we have a training and education channel filled with great content, automated signals that go within seconds, and actually it's a little more than seconds. Okay, it's basically between 1 minute. So the latest you'll get is 1 minute. Okay, trade entry and fill price, price target after fill, and also how to manage the positions. Okay, if you don't know how to manage these positions, we'll share that information and help you with that. Okay, and you get my guarantee that you'll make money. So it's a winning combination, and hopefully you've taken some value from this, and I can answer any of your questions. Okay, so let's see here. Okay, and let me take this down. People chat. Okay, let me go up to the top here. I'm going to stick for 0 DTE for now. Yeah, 0 DTE works. It works, guys. I mean, it really does. All right, not here screen. Okay, you can click on the full screen. All right, what is the fast profit? Okay, so Michael is a really very good trader, and he trades different instruments, including not vertical, but he does a lot of directional trades on SPX, and he makes a lot of money, way more money than I do. And he's very, very good. And we brought him in recently, and he's doing a really, really great job for us. And so that's really the highest trade alert that we have, and we have a good group that's in there. All right. Any other questions about the content that we had or anything else? Yes, you can upgrade. You can upgrade or downgrade at any time once you're in the service. Okay, and it's kind of kludgy, to do that with Telegram, but we have a process to do it. Okay. How many monthly trades are issued a month? I trade every single day. Okay, so probably I have to measure this, I guess. It's probably between 40 to 60 trades a week. It's constant between me, Ike, Vic, and a couple other traders. They do their own thing, and you're getting a lot of trades. Okay, sometimes, and actually when I talk to people that come into the service, I always tell them to say, look, there's a lot going on, but look at one channel at a time, and basically the easiest one is the monthly. Okay, and that's the $59 one, and so because a lot of times they just want to jump in and do everything, and you don't want to do that. Okay, you want to get expertise in one thing or another. Okay, how many 7DTE trades are issued in a week? Try to do that three times a week, except for when we get we have to adjust those trades, and then it slows down a little bit until we catch up again. Okay, so basically that's how we do it. And then if you're new, you can tell me, hey, can you tell me a good position to trade, and then I'll do that for you. I'll help you with that. How many 0 DTE trades? Let me see. 0 DTE trades are there for $99 subscription. Okay, I like I said, I trade pretty much every single day, except for the days that we have conflicting positions. Okay, so today I'm in a trade, in a 0 DTE trade, and pretty sure, unless we go down really hard, we're going to make money here. if you can give me an example of how you are going to manage your current 117 in the money. Okay, yeah. So when you get these positions, right? What I do is we roll that trade. We put on a different, so if it's a put and it's threatened, we'll put on a call spread. Okay, we'll move it down, put on a call spread, and that's where you that's where you get some losses. Okay, and this is what happens until we get down into the area where it's between the positions, between the range, and then we get out of that trade. Okay, that's kind of how we do that. So we roll these trades, several times, and eventually they come through. Which one would be preferred? Monthly. If you're not used to SPX, I would trade monthly. Okay, because it's a very slow trade, and then you can manage that, and there's no stress, on the monthly trade because it's so far away, from the money. 7 DTE is second, but the way that I do 0 DTE is I put on a trade between 9:30 and 9:30 and 9:35, and I that's what I do. I put on the trade at that time, and I let it go. And almost always, usually we'll get like 3 times that we have to roll a trade, but every day basically the market gives us the 0 DTE trades that they expire. How do you determine whether to trade bull spreads or bear spreads? I trade both, actually. For 0 DTE, I like to put on, like a monthly trade, I like to put it on when there's higher volatility, when the market's lower, and then put on the call spread after that, because it's shorter distance for the call spread. What is the minimal ideal account margin? I always say $3,000, but the best way to do this, go to one contract with $10,000. It's really the best way to get into this. What's the difference between rolling a trade and exiting a trade? Well, exiting a trade, rolling a trade, you're managing it so that you don't get a max loss. Okay, when you're exiting a trade, I just let it go. Either through expiration or my 10-cent rule. That's what I do, and it's worked out really well for the years I've been doing it. All right. I think we got all the questions here. Hopefully this was of value to you guys, and I hope to see you soon in our trade alert service, and just want to have a great day. All right, guys, thanks, and we'll see you soon. All right, guys, bye.